Welcome back to Factful Finance. Have you ever thought about how many people start investing and immediately make the wrong choice by picking the wrong broker? Trust me, it happens more often than you'd think. The question, how to choose the right broker and make your first investment, can sound a bit overwhelming, but it doesn't have to be. Today, we're breaking it down step by step so you can start making smarter financial decisions right away. First things first. A quick disclaimer. This video is for educational purposes only. Listing apps or products doesn't mean we're endorsing them. Always consult a professional for personalized guidance tailored to your financial situation. Now let's get into it. Choosing the right broker is the foundation of any successful investment journey. A good broker will make the process easier, while a bad one can lead to unnecessary fees, confusing processes, and even bad investment choices. So, what should you be looking for? Step 1. Understand the types of brokers. There are two main types of brokers: full service and discount. Full service brokers offer personalized advice, research, and a wide range of services. They're perfect if you want someone to hold your hand through every investment decision, but their fees are often higher. On the flip side, discount brokers offer lower fees, but leave the decision-making up to you. They typically provide online tools to help you manage your investments on your own. Let's look at this in action. Take Liam, for example. Liam is a beginner investor, and he's looking for guidance. He chooses a full-service broker, and over time, he learns about the market with expert advice. On the other hand, Emma, who is a bit more seasoned, prefers a discount broker where she can take control of her investments and save on fees. Your choice depends on your level of experience and how hands-on you want to be. Step 2. Check the fees. Fees can eat away at your returns over time, so be sure to understand them before committing. Some brokers charge a flat fee per trade, while others might charge commissions or account maintenance fees. For instance, some brokers might charge you $5 to $10 for every trade you make, while others could offer commission-free trading. The goal here is to find a broker that offers a good balance of low fees and quality services. Let's consider Benjamin, who made his first investment with a broker that charged $6 per trade. Over 10 trades, that's $60 gone. If he'd gone with a no-fee option, he could have invested that money elsewhere. Step 3. Consider account types. Different brokers offer different types of accounts. You might want to open a retirement account like an IRA, or you might want a standard brokerage account. The right account for you depends on your long-term goals. For example, Noah is focused on retirement and opens a Roth IRA to get the tax benefits. Meanwhile, Ava is more interested in short-term growth, so she opens a standard brokerage account. Make sure the broker you choose offers the right type of account that aligns with your goals. Step 4. Look for tools and resources. The right broker will equip you with the tools you need to make informed decisions. Look for brokers that provide in-depth research reports, educational content, and trading tools like stock screeners, portfolio trackers, and charts. A broker like Charles, who's a seasoned investor, loves a platform that offers these tools. Meanwhile, Mia, a beginner, enjoys the easy-to-navigate educational content and tutorials that help her learn as she goes. If you're just starting out, don't be afraid to look for a broker that offers these resources, as they'll help you learn along the way. Step 5. Customer service and support. This one is often overlooked, but it's crucial. If you ever run into trouble, you want a broker with responsive customer support. Can you easily reach someone by phone, chat, or email? Does the broker offer a FAQ section or live chat support? Alexander, who once had a technical issue during a trade, learned the hard way that a broker with poor customer support can leave you stuck when you need help most. Make sure your broker's customer service meets your expectations before signing up. Now that you know how to choose the right broker, let's talk about your first investment. Once you've selected a broker, it's time to decide where to invest your money. The key here is diversification. Don't put all your eggs in one basket. Start by looking at index funds, ETFs, or mutual funds. These are great for beginners. They allow you to invest in a variety of assets without having to pick individual stocks. For example, Henry has $1,000 to invest. He decides to invest in an S&P 500 index fund. which spreads his money across the top 500 companies in the US. That way, even if one company doesn't perform well, the others might balance things out. A great rule of thumb is to start with a small amount of money and invest regularly. By dollar cost averaging, you'll invest a fixed amount of money at regular intervals, regardless of the market's performance. Over time, this strategy can smooth out market volatility and lower the risk of investing all at once. Before you make your first investment, also ensure you have an emergency fund in place. Think of it like your financial safety net. It's crucial to have cash available for unexpected expenses before you start putting money into the market. What's the first step you'll take toward choosing a broker and making your first investment? Share it with us in the comments below. If you liked this video and found it helpful, why not subscribe to our channel? Hit that bell so you won't miss out on our next financial tips and tricks, designed to get you closer to your financial goals. Thanks for watching Factful Finance. We'll see you in the next video.